Welcome to Frontier, an investment podcast by Foresight, where we discuss strategies, trends, and challenges shaping private market funds.
Hello, I'm Chris Holmes, partner and lead of our hydrogen strategy at Foresight.
Hello, I'm Dan Wells. I'm also a partner at Foresight. I'm the co-manager of our energy transition fund, FEEP1 and FEEP2. Chris and I will be with you over the summer discussing all things investing, with the occasional distinguished guest thrown in to challenge our thinking around strategies, trends, and obstacles shaping today's private market funds in the whole world of sustainable investing.
And it's been quite the week, Dan, hasn't it, with the Chancellor's speech, the first rate cut since 2020, and an amazing few days at the Olympics with the home nation making the most as the partisan support. And I think they're now sitting third in the medal table. So it's been a bit of a distraction from the day job, I must admit.
Yeah, it's fantastic, isn't it? It's always a bit of a challenge to carve out the time for working at times like this when the Olympics is on. But no, you're right, Chris. There's been a lot happening in the world this week and for the last few months. I mean, think about the world of politics as well. There's clearly a lot's been happening here in Europe, and obviously nothing at all happening in the US. That's all very, very kind of boring over there at the minute. But no, it's interesting times at the minute.
Yeah, indeed it is. But I think to kick the show off, we should tell the listeners a little bit more about ourselves and why we've created this platform for private market investors.
Yeah, absolutely, Chris. So I mean, just in terms of my background, I guess I'm an investment professional. I've been in the kind of sustainable infrastructure and real assets world for over two decades now. I've worked in Europe and North America and Asia in clean energy investing and other forms of sustainable infrastructure, working on things in what's now called natural capitals of forests, soils, and oceans. And aside from that, Chris, I'm also, as you know, a very amateur runner and cricket player as well. So like to juggle work and family time with a fair amount of sports. And obviously, Chris, I think you would probably think of yourself more of a cyclist at heart.
More of a sitting down sports enthusiast, Dan, I must admit. But definitely keen to be out on two wheels whenever I can. And a little bit like yourself, I've been involved in the renewable energy and infrastructure industry for over 2 decades as well, with various lending institutions and advisory houses. I also worked for the government's Green Investment Bank when that was established, leading their waste and bioenergy team, which is a fascinating time. And I think it's really interesting now to see that almost come full circle again with the plans to establish a national wealth fund, to have that sitting within UKIB and to almost have the same policy mandate as we had back then to help mobilise private capital into really pivotal sectors. So I'm sure we can discuss that in due course. But yeah, looking forward to our discussions today and over the course of the podcast.
Yes, absolutely, Chris. And because I can do this and you can't, for modesty, I should point out that not just a cyclist, but a GB cyclist as well, Chris. So I think it's worth emphasising that you're pretty good at cycling, for sure.
As long as I stay upright.
Yeah, exactly. So Chris, you mentioned, interesting, your background, obviously, kind of previously being at the Green Investment Bank. Like you say, interesting at the minute that the UK now seems to be kind of moving back a world where government is really kind of motivated and working hard on kind of building the next blocks of the green economy here. Clearly, it's been a huge year, and it will continue to be a huge year for elections and the consequences that has for the climate and energy. And it feels a little bit like, interestingly, actually, in the UK, now perhaps the UK at the minute feels like a sort of island of maybe stability amongst somewhat more kind of turbulent scenes, you might say, both in the EU and the US at the minute.
I think that's a very fair comment and an observation. Certainly having a new government, but one with a very encouraging policy framework that will continue to encourage decarbonisation, continue to support green sectors, and to really put that at the heart of our energy transition journey in the UK. And as I said before, some big policy announcements. We'll obviously wait to see the detail behind that. I think that the snap election didn't give them enough time to really set out how all this will come to fruition, but we'll see that over the course of the coming months. But I think the headlines are quite encouraging. If we look at the National Wealth Fund, for example, looking to have sort of targeted intervention to bring £3 of private capital to every £1 of public sector investment, I think is a fantastic ratio, one that the Green Investment Bank had a few years ago. And they're targeting very important sectors, ports, gigafactories, electric vehicles, clean steel, carbon capture, green hydrogen, all these areas of our economy really do need that support. So that's very encouraging to see.
Yeah, exactly. I think that's exactly right. That there's clearly a lot of work to do in terms of fleshing out some of the details here, but the statements of intent are clear, and the kind of the key pillars of the approach in the UK. So things like the commitment for 100% clean power by 2030, the creation of GB energy. It feels like there's still kind of more work to do in terms of actually properly understanding how GB energy is going to play a role. But it's clear what the objectives are in terms of bringing down the cost of electricity, of achieving energy security and helping to push out the green transition. And these
Yeah.
areas around investment in infrastructure. And also, I feel from our perspective, a point that we've been making at Foresight for some time really is that the role that private sector capital can play in the energy transition, and the role that government can therefore play in helping to unlock and open those doors and maybe remove some of the barriers for private sector investment. And certainly an area that we've highlighted a lot in the past is investments into the grid itself. The grid obviously is a big bottleneck to the energy transition. Typically, whether it's the UK or internationally, the way that investment into the grid works doesn't typically encourage private sector investment, because typically the grids are owned energy companies by system operators that were designed 100 years ago to maintain grids rather than to completely kind of rebuild them from scratch. So I think it's great to see in the UK both messaging around encouraging private sector investment, and also specifically a focus on the grid, which is one of those areas that we see as a big bottleneck in the energy transition.
Yeah, I think that's exactly right. You know, for many years we've been focused on the generational aspect of the challenge in front of us, and quite rightly so. But it comes to stage now, and it's certainly in front of us at this point in time to focus on the grid and to focus on getting those green electrons to where they're needed. And it's really interesting because you look at some of the announcements being made by the new government around offshore wind, for example, and you see that industry has evolved over the last few decades. I mean, I was looking at some interesting points just earlier on. Our first offshore wind farm was around 25 years ago. That was up in Blythe. Just two turbines with 4 megawatts of capacity. So a tiny project. We're sitting here today with 14 gigawatts of capacity, which is fantastic to see. But the Labour government have come out with an announcement to say they want to get to 60 by the end of the decade. So that's a huge increase in quite a short space of time, which is wonderful to have these ambitious targets. Obviously, as you say, we need to mobilise private sector capital to achieve that. But the grid also needs to be invested in to enable that power to be utilised. I think that's the real big challenge, the bottleneck, as you say, Dan, and how the big challenge here is how do we get capital into the grid? How do we release those bottlenecks and to really mobilise the fantastic resource we have here in the UK?
Yeah, exactly. And we often talk about the kind of the new clean energy system as being something like an orchestra with lots of different instruments in it, and all those instruments need to work together. And as you rightly point out, the kind of the main instruments at the heart of it, in terms of the core renewables, it's extraordinary to see by how orders of magnitude they've increased in size over the last decade or so. And obviously that's been driven by these cost declines that we've seen over the last 10 years in wind and solar batteries, and starting to see in areas such as green hydrogen in the future. Interesting to see some of the areas of focus of the UK government, things like carbon capture and storage. I remember working on carbon capture and storage projects back in the kind of the sort of mid 2000s, and I think it's fair to say that there has not been a huge amount of progress there to date. But it will be interesting to see if there will be progress in the future, just given the amount of political kind of will and attention that is kind of focused on that. And I think then hydrogen is one of those areas where we as a firm have kind of said green hydrogen will be such an important part of the energy transition in the future that it's an area of specific focus for us. And Chris, given your particular focus on that area, I would be interested in your current reflections on kind of where things are with green hydrogen, both in the UK and internationally.
Certainly, Dan, I think you're absolutely right. This is an area where we have, we feel very encouraged by what we've seen over the last couple of years, where national policies that have been announced have evolved into specific pieces of legislation and regulation in various countries around the world. We've seen different support models. So here in the UK, we obviously have a CFD regime that's built around enabling industry in particular to be indifferent whether they use fossil fuels or green molecules for their operations, and that's fantastic. That's a specific business model which no doubt will be successful in the UK, and we're through to the second allocation round for that. it's also encouraging to see in broader Europe some specific pieces of regulation that are really forcing a change in the demand for green fuels, and that's bringing large corporations to the table negotiating long-term offtake agreements. That's really been the missing piece in the hydrogen market for quite some time, is the offtake story. Where who's going to buy the product, where's it going to go, how's it going to be transported, and we're really encouraged to see these contracts now being signed. At Foresight, we've been very active in the green hydrogen space, as you know. For a couple of years now, we have interesting investments in the UK and in Europe, and as I said, it's the progress is starting to really accelerate. It's very exciting to see.
Yeah, absolutely. And I guess, given kind of both our backgrounds in terms of working in this sector for going back to the 2000s, we've seen that kind of that story play out of renewables becoming a thing, becoming cost competitive. But it definitely feels like for several years we've been talking about how, as we reach these deeper levels of decarbonisation, there'll be this need for kind of particular forms of large-scale essential infrastructure that will be necessary for that kind of next phase. And that's the infrastructure around the enabling assets to basically enable the continued rollout of renewables, so flexibility in the form of energy storage in all its different forms, investments into the grid itself, which we talked about as being a bottleneck, and green hydrogen is obviously kind of part of that, as green hydrogen is a tool which enables green power to start unlocking decarbonisation of all these other sectors like transport and industry, and as well as helping to balance the power market itself.
Yeah, exactly. And we can't forget the role that the government has to play in these nascent sectors as well. We look, I made a reference back to the offshore wind sector just earlier on. That sector benefited from some very high subsidy support in the early years, and that was necessary. And we now have a huge supply chain that's built up. We've skilled our workforce around the offshore wind industry. We're a leader in Europe, and it's fantastic to see. And all of that has come about from government support through a specific and targeted regime. We hope to see the same in hydrogen. Clearly, the government needs to balance books, and there's only so much they can provide to support certain sectors. But really, the message for them is this takes time. We can't expect dramatic cost reductions in the space of 1 or 2 years. This will take decades to achieve. But the aim and the goal for hydrogen is very clear, and the role it can play is very clear. Let's hope that support will continue and enable these projects to go forward.
Yep, definitely, and therefore it's critical for both fund managers and for LPs themselves to be following closely what's happening at a governmental level, so that they can help kind of map and kind of tilt their investment allocations to the areas where they see kind of benefiting from those regulatory and policy tailwinds. And this is something we're going to be covering in the coming weeks and months, and talking about the most recent updates that we're seeing in the UK, which is touched on, in the EU, where we are seeing critical pieces of policy around green hydrogen and these other areas, so specific areas of support for things like grid investments, for long duration energy storage as well, which we see as being another critical area for investment. And in the US, where we've obviously seen the 2 years ago, the biggest piece of climate policy ever. And we're now going through a quite amazing kind of period in the next few months in terms of the political process there and consequences for the energy transition. I think it's worth then touching on the kind of regulatory piece and compliance, which is often quite a burden for both LPs and GPs, but obviously again critical for anyone investing in the sustainability transition and the energy transition. I think from our perspective, we would say that whilst what we do as a firm, as a fund manager, hopefully is by its nature driving forward the sustainability transition and helping decarbonisation, it's not just what we do, it's how we go about things. We need to hold ourselves to account to make sure that we are following best practice and adhering to the best kind of benchmarks and standards. I think it's fair to say there's been a step change this year in terms of compliance regulation around things like anti-greenwashing, and this is something that's certainly affecting fund managers and LPs alike.
It certainly is, Dan. I think that's a very topical comment, if you like, on the anti-greenwashing concern, and clearly front and centre of our activities as well. As you know, we have a very large and experienced sustainability team within Foresight, helping to guide us through what is an ever complex web of regulation and reporting requirements. But for good reason, I think, because certainly for our investors, they need to know that we are reporting in the right way, that we're capturing the data and articulating that to them, so that they can then report themselves internally in terms of how their investments through our funds are having an impact. And I think, we're certainly navigating our way through that at the moment, aren't we?
Yeah, absolutely. And there's been some discussion recently that possibly what might be a consequence of this kind of this sort of rising bar for sustainability reporting might be a move away from greenwashing to green hushing, whereby maybe more from a kind of corporate perspective, companies just kind of feel that it's a bit too difficult to kind of navigate this system and this space, and therefore sort of not report on it at all. I think from our perspective, obviously, we will look to always be ahead of the standards as they apply. These standards will apply to us, and they will typically apply to LPs in our funds. And as you say, Chris, it does involve quite an investment in terms of people and time and resources and energy from our side. But I think we would say that actually all that investment is very much worthwhile, because it means that we keep improving the way we go about things and being kind of self-reflecting and critical about how to raise the bar in the future.
Yeah.
So, Chris, we've already had a poll of investors in terms of how they're thinking about things at the minute. Quite a high level question, but I think that some of the answers are quite indicative here of just where people's minds are currently at in 2024. So the question we set people was, as an investor, what is your top priority when it comes to navigating the current market landscape? So let's just talk about the answers that came back, maybe one at a time. So the first of those is risk management. 24% of respondents said that risk management was their top priority. That makes it the second highest, and clearly risk is very much on people's minds at the minute, Chris, isn't it? Given what we've just talked about in terms of, in particular, policy developments and also regulatory and compliance, I would say.
There's certainly lots to navigate through, and obviously, that's part of our role in managing capital on behalf of our clients and seeking compelling investment opportunities, but also comparing that to the regulatory landscape to make sure that we have that platform for growth, and that we have the confidence that those investments will bear fruit in terms of what they're designed to do from an impact perspective, both in terms of the environment and from a financial side of things.
Yeah, exactly. And I think while it's great to see the kind of progress that we've seen on the policy side, and whether it be in the UK, whether it be actually in the EU as well. Obviously, we saw some results coming out of the EU elections earlier in the year, which were indicative of some level of kind of anti-green or kind of green backlash. But actually, the reality is that the policy landscape in the EU as well as the UK is looking very solid and stable and kind of favourable for clean energy investing. But risk management is clearly still a topic of key focus to investors, and probably given also aspects around strain on public sector balance sheets and lots of statements of intent around clean energy, but clearly given the strain that's created by the need to invest in the clean energy transition, alongside changing demographics and the kind of implications for that on public sector balance sheets, and of course costs of security and geopolitics. So I think all of that is kind of weighing on people's minds and feeding through in terms of therefore the importance of risk management going forward as well.
I think that's exactly right, and it's quite a broad framework, isn't it, in terms of risk management, and we can bring in climate risk alongside that as well. Clearly we are looking to invest into assets with long lifespans, 10, 20, 30 years, and as we all know, climate change is upon us. Having to really make sure that our assets are resilient to the risks around climate that are facing us, and assessing those risks and making sure that they are prepared for certain eventualities in times to come.
Yeah, exactly, and I think that's a really good point, Chris. And just to give an example of what you're talking about there, so with the EU taxonomy on sustainable investing, which we see as a really important kind of pillar of policy, and something that we take seriously and align some of our funds towards. The taxonomy mandates us to really work on and build out plans for things like climate resilience of assets. And sometimes there's a tendency to think that because we're investing in a solar farm or a battery or something that by its nature contributes to decarbonisation, that's enough. Well, no, you have to also think about the role that asset will play in society and how we will adapt to climate change, the impact on things like biodiversity, and of course supply chain, and how things like labour rights are treated there. So I think that's a really good example, Chris, of the need to carefully manage risk given this rapidly developing policy and compliance landscape. Should we move on to growth then? So interestingly, growth came out as clear the clear winner here. So 59% of respondents indicated growth as their top priority right now. interested, Chris, there to see if you had any sort of hunches to what sort of driving people's thinking around that.
I think it's a reflection on the huge challenge in front of us, Dan, that we're not going to meet our net zero targets without growth, a growth in a scale that we haven't seen before. And to my earlier comments about scaling up offshore wind as one example, these are very ambitious targets which are needed to meet our net zero goals across various different countries and regions. So I can understand the reflection of our listeners there, and it's something which obviously we're very excited about as well, because growth brings opportunities to invest, it brings scalability to the transactions which we're backing, and really sort of looking at the impact that we can make, but also harnessing that private sector capital to enable that infrastructure to be built out, and that's really the key. That's where we focus on. Our clients are there to facilitate this transition, to facilitate this growth. And I think that's what's really exciting for the next 5 or 10 years.
Yeah, exactly. It's a clear message from government that growth is kind of critical to everything. If we want to meet our targets, if you want to balance our books from a kind of from a sort of national perspective, then growth is critical. I think we would say that that clean energy in all its kind of various forms is critical to that. It helps deliver reliable, low power, and obviously helping to decrease long-term climate risk as well. So that's critical to onward growth. And also a kind of specific point here probably to touch on it is the role of interest rates and financing costs and how that plays into growth. We appear now to be at a period when we're starting to rotate possibly back into a slightly more kind of declining interest rate world. Still to be seen, but that is a really important consideration for investors, because to the extent that interest rates and financing costs come down, then that will have consequences, like, for example, further reducing the levelized cost of energy from a clean energy perspective because of reducing financing costs. So I think that's very much one for investors to keep a careful eye on right now, as governments look to drive growth as much as possible, whilst also keeping a wary eye on inflation to make sure that that's not coming back as a risk.
I think it's clearly is now heading in the right direction. It's very promising to see rate cuts happening, and hopefully that trajectory will continue. And you're quite right, Dan. This is making capital more efficient. It will unlock these large scale infrastructure projects which will drive the growth we've just been talking about. You mentioned there in terms of the equity investment side of things, but also we need to recognise that these big projects need project finance as well. So bringing with us the lending community and unlocking their huge reserves of capital that they're wishing to lend into these projects, and obviously having a product that's cheaper than it has been in the past will make these projects more efficient, more effective, and for the end consumer, ultimately cheaper in terms of our energy transition.
So just moving on then, Chris, interesting, the ESG criteria coming in at number 3, as it were. And so we might think about why it is it that ESG criteria is something less of a priority than it previously was, or as compared to other factors right now. I'm going to hazard an opinion here, actually, that I think possibly part of this is tied up with what has been referred to as the kind of the ESG backlash over the last couple of years. And I think a really important point here is to distinguish between what I think was the focus of that kind of ESG backlash, which is quite a specific thing, which essentially was really kind of focused on public markets, essentially quite conventional investing equity strategies with essentially various forms of ESG kind of labels on them, kind of the sort of negative PR that followed when, for example, it turns out that there are lots of different ways of measuring ESG labels, and there's the lack of consistency, and probably to some degree kind of labeling of strategies that really don't have a particular or make a particularly material contribution to the really kind of key issues like climate. So contrasting that to mobilizing capital at scale, in particular through private markets, into genuine solutions to the sustainability transition and basically rebuilding the world's economy. So I feel there is a bit of a kind of there's a distinction to be drawn here between what we might call kind of ESG investing and then what we might call more sustainability impact investing.
Yes, I think that's right, and also perhaps the ESG criteria has been embedded in what we do and what we discuss over the last 5, 7, 8 years. If we think back to the early days, it was almost a distinguishing factor. It often came with a discussion around, is it at the expense of financial returns? But now that's certainly not the case. We can demonstrate that it goes hand in hand with investing into the sectors which we follow, and so perhaps the response to that question is also around the fact that this is just an expected part of investment, and the criteria is embedded into those decision making processes that we make as a fund manager, but also our investors make in terms of allocating capital to us. So I think a couple of points there which maybe we can discuss in more detail in other episodes, Dan.
Absolutely. Yeah, I think we've got some great guests coming up as well to have exactly those conversations. The final answer or potential answer we had was adapting to AI as a priority for investors right now. That didn't get any votes at all, actually, interestingly. So I wonder if, Chris, that means that we can declare that there is no risk of the robots taking over, so we can all relax now.
I think it's good news for you and I, Dan, that we're going to be still needed for the next few years.
In all seriousness, I think, Chris, AI is obviously one of these areas which needs a lot of discussion. It is interesting that it hasn't come up as being a top priority in this poll. Wonder if to some degree it's just an element of that being such a big and difficult topic that almost it can get sort of pushed to one side because it's a bit scary and hairy and maybe kind of difficult to process for investors. But Chris, I think it is a topic we need to be thinking about and discussing because it clearly will have a huge role both within energy and the kind of broader transition of society towards a more sustainable basis.
It certainly will, Dan, and perhaps forcing our listeners to choose a top priority has maybe sort of resulted in that poll result. But maybe if we rephrased it and said list your top three, I'm sure there'll be some supporters of the adaptation to AI and recognising the role it can play. Because, as you say, it's certainly going to be a key feature of our transactions going forward. If you look at the complexity of some of our projects, whether that's battery storage or just unlocking the grid, the software demands that are upon us now, and the role that AI can play in terms of being more efficient, capturing those revenues, managing the ever complex regulatory and contractual regime that we find ourselves in, really does necessitate AI, in my opinion. But it has to be targeted, and we need to understand the role it can play in the future. Yeah, I think certainly a topic we need to explore in a bit more detail, and perhaps pick out some key areas where we're pretty certain that there is a very positive impact that issue can.
Yeah, exactly. So it's certainly an area that we'd be interested in views from investors on in terms of how they're thinking about it. And to give just one example, Chris, of the kind of applications where we've seen AI already making a positive impact in our area is in the whole area of kind of weather forecasting and how that impacts energy markets. Obviously, with wind and solar and renewable energy at the heart of energy systems now, weather forecasting over even short-term periods of a matter of hours or days is extremely important for system operators in terms of planning energy systems. And we've already seen some good examples of where AI applications are producing extremely positive results in terms of improving the accuracy of those forecasts. And that obviously helps balance the energy system, which in turn reduces the cost of decarbonisation. And I think what you're right to point out, Chris, the fact that we will need AI. It's necessary in terms of reducing our resource use. We've got such a huge challenge ahead of us with the sustainability transition. And actually, whilst employment is one consideration, we have huge needs for people to be doing stuff as well. So the fact that that actually tasks being automated has got a genuine role of importance to play. But certainly, this will be an interesting area for us to get our teeth into in the coming weeks. So fantastic. Well, that's given us some context for our thinking and our discussion for the coming weeks. So, Chris, then just looking forward over the next couple of months, the kind of topics we'll be discussing will be things like, for example, so the whole notion of kind of these bottleneck assets and the energy transition, and in particular exploring long duration energy storage, which is something I'm particularly excited about. Long duration energy storage, I think, has got a massive role to play in the energy transition as a whole. We're going to be talking about the future of food. How do we feed a population which could be 9 or 10 billion people across the planet without trashing the world at the same time? Hydrogen is going to be a discussion topic in itself, which I'm sure is something you're particularly excited about there, Chris.
Absolutely. I think, as we know, it's got a key role to play. So looking forward to that episode.
And then also kind of the whole area around nature and forests and soil and restoring ecosystems. And that's, I guess we would say that's kind of a topic in of itself, and something that is certainly from our perspective is increasingly of key interest to investors. So how you invest in what is increasingly being called natural capital, but it's also something that relates very specifically to clean energy as well. And we'll be talking no doubt about some of the work that we're doing to invest in nature around our clean energy assets, which we see as being really important. We'll be talking about our partnership with the fantastic and world famous Eden project down in Cornwall around all things to do with nature and what we call our nature recovery blueprint. So, Chris, I think we've got some meaty topics to be getting our teeth into in the coming weeks.
We do, and I'm really excited by all of those topics, Dan. Very, very pertinent in their own rights. And I think, as you said at the beginning, it's not going to be just you and I having a conversation. We're going to be bringing on some very distinguished guests to help us navigate our way through those topics and to hear from industry specialists and what their view is on those issues. So yeah, very exciting to see what comes through in those episodes.
Excellent. And if we can weave in cycling or running or cricket into any of those, then I'll be very excited indeed.
I'm sure we can achieve that, Dan.
Excellent. Well, I'm looking forward to it, Chris. Well, Chris, hopefully some people have found our discussion today at least slightly interesting and useful. I think that one of the key points we would make is that we view this very much as a two-way, a multi-way conversation. Obviously, we live and breathe this stuff every day, but we're always learning ourselves. We certainly don't know everything. We very much value the views of both other investment managers and from institutional investors themselves on how they're thinking about things. And as a kind of broader community within the finance and investment world.
Indeed, and it's been great to kick off this series. Very much looking forward to the rest of the episodes. And really just to say thank you for joining us today. We'll be back with you very soon. Please do ask a question for our next episode. Share your comments. As Dan said, this is a two-way learning experience for all of us. So we're very interested in your thoughts and comments, and to also participate in our polls for future episodes as well. So please follow us on LinkedIn, visit our website, foresight.group/frontier, and we'll see you very soon. Thank you.